Hi everyone, today we'll be going over accounts October-November 2021, paper 3-3, question number 5. This is structured paper 3, which consists 6 questions, each of 25 marks, and we have a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 5 is from section B, which relates to cost and management accounting. Without any further delay, let's get started. LP PLC uses a system of budgetary control. So budgetary control basically means that LP PLC plans income and expenditures in advance and then compares it with the actual income and expenditures in order to identify if any corrective action is required or not. Now, for the first part of this question, we need to state 2 advantages and 2 disadvantages of operating a system of budgetary control. Let's write it down. Now, we know that budgetary control plans income and expenditures in advance, which means that it kind of sets a target which can motivate the staff, which is a good thing for any business, right? So let's write it down for our advantages. It sets target which can motivate staffs. Alright, secondly, budgetary control also leads to an efficient use of resources since it already plans and the company kind of has a responsibility to reach those targets, and in order to do so it needs to make efficient use of the resources. Let's write it down. It leads to an efficient use of resources. Now we can move to the disadvantages. Budgetary control can be expensive to prepare because we need to consider all of our past incomes and expenses and then estimate the future income and expenditures based on those data. So that is a disadvantage. It may be expensive to prepare. Like I said before, the future income and expenditures are based on past data, which means that the data used in budgets are only estimates and can be inaccurate as well because we are just estimating the values for the future. Let's write it down. The data used in budgets are only estimates and can be inaccurate. Alright, this concludes the first part of this question. We can now move to the second one. We are given additional information regarding the budgeted sales for 2022. Then for the second question, we need to state budget other than sales budget in which the following would be recorded. The first one is the value of credit sales. Whenever we're talking about credit sales, it obviously gives rise to trade receivables, right? So we have to mention the value of credit sales in our trade receivables budget. Let's write that down. Then for the second part, we have the value of total sales. So we know that in our format of income statement, we always start with the value of total sales, and if we're talking about budgeted values of the total sales, then it can be used in our budgeted income statement. Let's write it down. Okay, then we're given additional information. It states that half of credit customers pay in the month after sale and receive a cash discount of 5%, and the remainder pay in the second month after sale. So whatever credit sales that we made, half of it will be paid in the month right after sale, whereas half of it will be paid after 2 months. Then the payments to credit suppliers, these are the budgeted payments for the month of March, April, and May. Then we're given that other payments are expected to amount to 30,000 a month. Again, this is also an estimated expense for the future. Then we're given that the directors intend to issue 10,000 ordinary shares of $1 each at a premium of 0.20 per share during the March 2022. Let's figure out the total value of the issued share. So we are issuing 10,000 ordinary shares. That's the number of share, and we just need to multiply it with the rate. And we can see that the nominal rate is of $1, whereas we're issuing the shares at a premium, and the premium rate is 0.20. So the total rate is going to be 1 plus 0.20, which is 1.20. So we can just multiply our number of shares with this rate in order to figure out the total value. So that's 1.20. This gives the total value of issued shares to be 12,000. Then they intend to buy a new non-current asset in March 2022. This will cost 72,000. Half of this will be paid in March, with the balance being paid at the rate of 1,000 a month starting in April 2022. So half of this amount of 72,000 will be paid in the month of March, whereas the remaining half, that will be paid in installments, where the installment amount will be 1,000 for each month. Then we're given the balance on the bank account on 1st March 2022 is expected to be 8,000 overdrawn, which means that this is a negative balance. Alright, now we can have a look at our question. We need to prepare the cash budget for each of the months, March, April, and May 2022. Okay, so let's just write down the months. We have March, then April, and May. Okay. Then we are about to prepare a cash budget. And in cash budget, we only record the cash receipts and cash payments. We will start with our receipts. Now let's have a look at the given information in order to figure out our receipts for the month of March, April, and May. We are given the information regarding our budgeted sales right here. And we are told that the proportion sold for cash. So this is just the proportion of the total sales made, which will be cash sales. And we are preparing our cash budget for the month of March, April, and May. So let's figure out the cash sales made in those particular months. So the total sales is just going to be the total number of units multiplied with the selling price per unit. So for the month of March, the total sales is just going to be 1,240 times 80. And the proportion for cash is 30%. So 30% of the total sales is going to be cash sales. Let's figure out the amount of cash sales. That's going to be 1,240 times 80 times 30%, which we can write down as 0.30. So this gives the cash sales for the month of March to be 29,760. Now we repeat the same process for the month of April and May. For the month of April, we have the total number of units to be 1,220. We have the selling price of 80. And the proportion for cash sales is 30%, so we can write it down as 0.30. This gives our total cash sales for the month of April to be 1,220 times 80 times 0.30, which is 29,280. We repeat the same process for the month of May. We have the number of units to be 900. We have the selling price of 92. And the proportion sold for cash is 20%, so that's 0.20. So the total cash sales in the month of May is going to be 900 times 92 times 0.20, which is 16,560. So we will be just writing these three amounts as cash sales in our cash budget. Let's do that. So first one, we had receipts from cash sales. For the month of March, we figured it out to be 29,760. For the month of April, that was 29,280. And for the month of May, it was 16,560. All right, let's have a look at the above information again. We were told that half of the credit customers pay in the month after sale and receive a cash discount of 5%. It means that whatever half of the credit sales that they are paying for, they will only pay 95% of that particular amount because they are receiving a cash discount of 5%. So the remaining amount is just going to be 95%. Let's have a look at our sales budget given above. Okay, and we know that half of the credit sales are to be paid right after that month, which means that the credit sales for February will be paid in the month of March. For the month of March, it will be paid in April, and for the month of April, it will be paid in May. But only half of the credit sales after applying 5% cash discount will be paid in these consecutive months. All right, So if the cash sales is 25%, then the credit sales is going to be 75%, right? And if cash sales is 30%, then the credit sales is 70%. It is the same for April as well. Now, we just need to pay half of these credit sales after applying a cash discount of 5%. So for February, total sales is just going to be the units times the selling price per unit, that is 1080 times 92. And if we are figuring out the credit sales, then we have to multiply it with the proportion sold for credit, which is 75%. So that's times 0.75. And we are only figuring out the amount paid right after that particular month for half of the credit sales. So half is just the 50%, so we can just multiply it with 0.50. And they only pay this half of credit sales after receiving a cash discount of 5%, which means that they will only pay 95% of the amount. So we can just multiply it with 0.95. So this gives the amount for the credit sales that is being paid in March to be 35,397. We repeat the same process for March. So the credit sales is going to be 1240 times 80 times the proportion of credit sales, which is 70%. And we're only paying half of this credit sales, so that's 0.50. And we're applying a 5% cash discount, so that's 0.95. This gives the amount to be paid in April to be 32,984. Let's repeat the same process for the month of April. The number of units is 1220 times the selling price is 80. The proportion for credit sales is 70%. Then we're only paying half of this credit sales, so that's 0.50. And we're applying a cash discount of 5%, so that's 0.95. This gives the amount of credit sales to be paid in the month of May to be 32,452. So now we record these three amounts for the month of March, April, and May respectively under the heading of trade receivables received after 1 month. Let's do that. So we can just write it down as trade receivables, which we received right after 1 month. For March, we figured it out to be 35,397. For April, it was 32,984. And for May, it was 32,452. Okay, let's have a look at the above information again. We only paid half of the credit sales, right? Then the remaining half is to be paid in the second month after sale. Let's have a look at our sales budget again. So if we're making sales in the month of January, then half of the credit sale is paid in February, which we already wrote down. Then the second half is to be paid in the month of March. And this amount is to be paid without receiving any sort of discounts, right? So if the proportion of cash sales is 25%, then the proportion of credit sale is 75%. Let's figure out the half of the credit sales that is being paid in the month of March for the sales made in January. So that's just going to be 1,000 number of units times the selling price of 92 times the credit proportion of 75%. And we're only paying half of this amount in the month of March. So that's 0.50. This gives the amount of credit sales to be paid in the month of March to be 34,500. Now we repeat the same process for the half of credit sales made in February, which is to be paid in the month of April. All right, I'm going to write it here. So that's number of units 1080 times the selling price of 92 times the credit sales proportion of 75%, and we're only paying half of it. So that's 0.50 as well. This gives the amount of credit sales to be paid in the month of April to be 37,260. Let's repeat the same process for the sales made in March, for which half of the credit sales will be paid in the month of May. So that's just going to be the number of units 1240 times the selling price of 80 times the credit proportion of 70%, and we're only paying half of it, so that's 0.50. So this gives the total trade receivables received in the month of May to be 34,720. Now we will record these amounts of 34,500, 37,260, and 34,720 in the months of March, April, and May respectively in our cash budget. Let's do that. And we will put this under the heading of trade receivables, which are being received after 2 months. That's going to be TR 2 months. And the amount we figured out for March was 34,500. For April, it was 37,260. And for May, it was 34,720. Okay, now if we have any other receipts. Okay, we also know that the directors intend to issue 10,000 ordinary shares with the nominal rate of 1 and a premium value of 0.20, and we already figured out the value of issued shares to be 12,000. So this means that 12,000 will be received by issuing shares in the month of March. So this can also be entered as a receipt in our cash budget. Let's do that. So we can write it down under the heading of issue of shares. And we're issuing the shares in the month of March. So we will be receiving the amount of 1,200 in March. So this concludes all of the receipts. This concludes all of our receipts. So now we can just figure out the total receipts for the month of March, April, and May. So for the month of March, that's going to be 29,760 plus 35,397 plus 34,500 plus 12,000, which gives us the total of 111,657. For the month of April, that's going to be 29,280 plus 32,984 plus 37,260, which gives the total of 99,524. Then for the month of May, that's going to be 16,560 plus 32,452 plus 34,720, which gives the total to be 83,732. Now we are done with our receipts section. Now we can move on to the payments section. And payments records all of the cash that is being paid by the business, right? Let's have a look at the above information. We know that the payments to credit suppliers are given for the month of March, April, and May to be 55,200, 59,616, and 59,520 respectively. So we need to record these amounts in our cash budget, and we will record these amounts under the heading of trade payables because these are the payments being made to credit suppliers. Let's do that. So trade payables. And for the month of March, we had our trade payables to be 55,200. For the month of April, it was 59,616. And for the month of May, it was 59,520. Let's have a look at the information again. We're also told that other payments are expected to amount to 30,000 a month. So this should also be recorded in our payment section. Let's do that. So we can term it as other payments. And this amounted to 30,000 each month. So that's 30,000 for March, 30,000 for April, and 30,000 for May. Let's have a look at the above information again. We were also told that they intend to buy a new non-current asset in March 2022. And this new non-current asset costs 72,000. And half of this will be paid in March. So that means that the half of 72,000 is going to be the payment for March. Let's calculate that amount. That's just going to be 72,000 divided by 2, which gives us the total amount of 36,000. So 36,000 should be recorded as a payment for the purchase of non-current assets in the month of March. And then the balance will be paid at the rate of 1,000 a month starting in April 2022, which means that the payment will be made at the rate of 1,000 for the remaining months. So 1,000 will be recorded for the months of April and May in our cash budget. Let's do that. We can record this under the heading of purchase of non-current assets. Okay, we paid half of the amount for the month of March, which was 36,000. Then for the remaining months, we are paying 1,000 each. Alright, this concludes all of our payments. So we can just now figure out the total payments for the month of March, April, and May. For the month of March, the total payments is just going to be 55,200 plus 30,000 plus 36,000, which results in 121,200. For the month of April, that's going to be 59,616 plus 30,000 plus 1,000, which results in 90,616. Then for the month of May, that is 59,520 plus 30,000 plus 1,000, which results in 90,520. Now we will figure out the net receipts, which is just the difference between the total receipts and total payments. So for the month of March, that is just going to be 111,657 minus 121,200, which gives us the negative balance of 9,543. Since this is a negative balance, we record it in a bracket. We repeat the same process for the month of April and May. For April, that's going to be 99,524 minus 90,616, which results in a positive balance of 8,908. Then for the month of May, that's going to be 83,732 minus 90,520, which results in a negative balance of 6,788. All right, now we just need to record our initial opening bank balance for the month of March. I think that we were given the information regarding this. Right here, yes. The balance on the bank account on 1st March 2022 is expected to be 8,000 overdrawn. So this is just going to be the initial balance for the month of March. Using this balance, we will then figure out the closing balance and the initial balance for the month of April and May. Let's write it down. So initial balance can be recorded under the heading of balance brought forward. So that's balance BF. For the month of March, we are given the information that it was 8,000 overdrawn, which means that 8,000 is negative balance. Alright, then we need to figure out the closing balance for the month of March. Closing balance can be written down as balance carried forward. And in order to figure out the closing balance, we just add our net receipts to the opening balance. So that's just going to be negative 9,543 plus negative 8,000, which again results in a negative balance of 17,543. This is the closing balance for the month of March, and the closing balance for the month of March will act as the opening balance for the month of April. So we can just write down the same amount as the opening balance. So that's 17,543 in a negative value. Now, in order to figure out the closing balance for the month of April, we just add our net receipts for the month of April to the opening balance, which is going to be positive 8,908 plus negative 17,543, which again results in a negative balance of 8,635. Then this closing balance for the month of April will act as the opening balance for the month of May. Now we can figure out the closing balance for the month of May by adding the opening balance to the net receipts for that particular month. So that's going to be negative 6,788 plus negative 8,635, which results in a negative balance of 15,423. So this will be the closing balance at the end of the month of May. This concludes our cash budget. And this also concludes the third part of this question. Now we can move to the fourth one. Alright, we are given the working section right here. So make sure that you do all of your workings in this particular table instead of scribbling all over the question paper like I did. Alright, we are again given an additional information. The company pays its credit suppliers 2 months after the month of purchase and never receives any cash discount. Okay. One of the directors has suggested that the company should pay at least a month earlier and receive the discount. As we can see with our trade receivables as well, whatever trade receivables we received after 1 month, we were given a cash discount of 5%, but whereas for the trade receivables that we received after 2 months, there were no cash discounts given. So the directors is just suggesting the same for our payables. Maybe if you paid a month earlier, then we could also make use of the cash discount that we would possibly get. Now we need to advise the directors whether or not the company should pay earlier and receive the discount. We need to justify our answer. So obviously, if you're receiving a discount, it would be an income. So discount received would be an income. Then paying sooner could improve relations with suppliers as well. You can write that down. Paying sooner could improve relations with suppliers. But we also know that the company is operating in an overdraft because we have been receiving negative balance for the majority of the months. So maybe the funds may not be available to pay sooner due to that particular reason. Let's write it down. Funds may not be available to pay sooner as company already operates on overdraft. Okay, considering these factors, I would make the decision to suggest the company that they should pay earlier and receive the discount. Let's write it down clearly. So the decision is that the company should pay earlier and receive the discount. This concludes the fourth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to this channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.